Hello, ladies and gentlemen, and welcome to the latest edition of Levalytics on Video. I am your host, Jordan. Some of you may know me as Permable Nino on the Twitter webs. And welcome to the new show, you guys. And first of all, I want to start off by apologizing to everyone that it's been close to 10 days since the last old school market analysis slash portfolio update. I'm not sure which version of the articles people prefer. I do one of each week. One of them is a deep research on a new topic type article, and then one is just the market cap, the market recap updates and stuff like that. So we're back in action though, back to the YouTube world, and yeah, just ready to get into it with you guys. All right, so let's kick things off. At the beginning of the article, we basically went back to what we've been talking about over the past few weeks not few months, but probably the past few weeks, is about the equities market. Is this the last shoe to drop for the crypto markets, right? There's a lot of volatility related to the a war in Iran and all of that, and if that could possibly be a drag on the crypto markets as well. So what we've seen this week is that really was not the case. And to tell you the truth, if you want to go look at this, the black line here, this is SPY. SPY is back at the highs. Got a little red dot print, which happens when there's large volatility spikes, which is this purple line. This purple line is the VXXZ score, and this is the prints. The red dots on this chart are when you get prints above 2 for the VXXZ score. And if anybody does not know what the VXX is, it just tracks it's a tradable instrument for the VIX. And we can just keep it simple with that. So whenever this thing trades at very high values, this is a 90-day Z score for this VXX Z score. It is a pretty large print, and they're not very common. In a previous article, we had talked about how these are effectively at most happen once per year. And yeah, it provided really great signal this instance for providing a bottom. In March 2026, we got a print of 2.63 Z score, and that gave us the red dot here, and we got the bounce for equities. And at this point in time, we also did get a historically significant drawdown across the board in equities too. So the median return for a large selection of large cap stocks that I track on dudeterminal.com was down minus 8.24%. And if you want to understand what I mean by this, I can take you to Dude Terminal right now and you can look at this. So I have this table here, and what I need to highlight for you is the median 90-day return of selected large cap stocks. And if you want to know what stocks these are, they're in here in this bar chart. But let's move on. So you can see that's a median 90-day return of selected large cap stocks. These are U.S. equities, by the way. So what you look is at the top 10% median return and bottom 10%. Bottom 10% instances are when 90-day returns are minus 7.33% or lower. And as you can see this metric is that we got below that value. So we had bottom 10% returns, we had a large volatility spike, and if you guys remember from the previous market update, is that we also had a large percentage of equities trading to new 90-day lows. And the hit rate on the market bouncing with that metric too was very, very high. So we had a large selection of metrics that were giving us good signal that there's a decent chance that we're going to get a bounce, and we're going to get a bounce soon. And the good news is that the damage to crypto markets was relatively contained. I mean, I think there was like a little bit of panic here and there, but we've been all watching the charts. We've been watching them closely, and it speaks for itself. Bitcoin did not break to new lows. And matter of fact, it's testing the highs of the range right now. It's trading right around 75,000 right now, if I remember correctly. Hold on one second. Let's go to trading view really quick. Yeah, trading right at 74.8 thousand. So that's something encouraging. Equities have already made their move. We're just waiting for crypto to wake up a little bit. And with that in mind, we'll just move over to realized volatility. As you can guess, you've probably memorized the Bitcoin chart at this point. The black line is the BTC USD price, and the blue line is the 5-day realized volatility for altcoins. And this is for a very large selection of altcoins. This takes into account every single altcoin perpetual swap pair on Bybit, which is it's in the hundreds, 500, maybe around 500 pairs or something like that. So you can just see the whole point of this is that what I'm trying to get at by bringing this chart up after I initially mentioned that, equities are bouncing, they're making their move. Where's crypto at? It's like, okay, The number one thing that you need to know about crypto is that volatility dies off in a bear trend, which, as you can see, bear trend. As you can see, volatility dies off. And in bull trends, you'll get volatility spiking for crypto. And that has just not been the case. And in my opinion, when we get this breakout, if and when we get a breakout that is worth being excited about, volatility will not be just hanging out at the lows of this bear trend. We will be getting a spike up to, at least somewhere where things got a little bit exciting on the way down. So that's something to keep in mind. And yeah, the reality is that, a lot of alts actually have moved recently, but this hasn't been quote unquote the move. That's my opinion. I could be wrong, but I think I don't even think people would find that comment controversial. And especially because Bitcoin is trading at range highs right now. Bitcoin hasn't even broken out. Bitcoin at least needs to break out if we're going to have something that is worth cheering for, or volatility spiking, or altcoins going crazy, or anything of that sort. So yeah, so where is crypto right now? We are still trading within a range at the bottom of a bear trend, even though equities are trading at their highs. So we're kind of just waiting to see what happens and see if we get a little bit of pop in the next few weeks. This is what we've been talking about in the past couple weeks of issues, that we were expecting some sort of big move for crypto to occur to the upside in the next 2 to 6 weeks. And, given the fact that we already got the bounce in equities, that window might be shifted forward to the front end of that time frame. Obviously, you never know, but I'm starting to get that feeling that things are heating up and we're potentially gearing up for a big move up. So let's move on to the next chart. So this is difficult to see, but this calculates the consecutive days in a row that altcoins have not made new 90-day highs. That's the simplest way to describe it. And the current trend that we're at is right around 482 days in a row. And if people want to know when this started in December 15th or something like that of 2025. This is effectively right after the election. Basically after the sell-off at the blow-off top of the election. And ever since then, we have not had anything basically to get excited about in terms of altcoins. Just been grinding this thing up for almost 500 days now. And for a little bit of context, you wonder, what is a bear trend? There's some things that are like bear trends that are like shorter term, like 30 to 90 days. And then there are bear markets, which is what we've had in crypto. People have not realized this. We've talked about this in other videos as well, that the blow off top really was right after the U.S. presidential election. If you really want to get into a bunch of the different metrics and the data, there's just plenty to show that was the last time the market was remotely excited about anything. And since then, it has effectively just been death to crypto since that moment. So for, a little bit of color though, 513 days was the duration of the 2022 bear market. And so we are pretty close to that like bear market duration level if we're just going to use the previous bear market as our gauge to determine whether or not this was a bear market. So it's just good to see this stacking up as, we have compressed volatility, which makes sense because we're at the bottom of the bear trend, and also the fact that BTC is testing local highs, altcoins are popping a little bit, and then you have equities bouncing off of the Iran war / oil scares. So, there's a lot of things that are kind of coming together at once that provide a lot of potential kinetic energy or movement to the upside if we get some sort of breakout from here. It's a kind of move that, after a downtrend of this long, I would question people, not question them, I would make them reconsider fading the first impulse of it, because the odds is that it'll be a long duration, likely explosive move when it happens, because the trend has just been endless. So that's just something that we can keep in mind moving forward. Even if you're a long only trader and you're just like selling the first pop, obviously you never know, quote unquote, until you look back on it, what the first pop was, right? But that's our goal here at Levelitics, and our videos and our write-ups and everything that we do. We're just trying to reason our way through the market and put as many pieces together as humanly possible to better understand what is the right moment to strike. When does it make sense to say things are overheated? to the upside, or things are extremely depressed and oversold to the downside. And like I said, this is from a duration perspective, this is, basically textbook bear market. So keep an eye out for that moving forward. So one thing that I think is encouraging to see is that the 90-day moving average for altcoins is sneaking up, right? It's above 1 now, 1.017 right now. And this takes into account all perpetual swap pairs on Binance, I think, when I calculated this. So it's similar to Bybit, basically. There's hundreds of assets taken into account when this calculation is made. That way we make sure we have a good sample size and that it's actually representative of what's going on in the crypto space, right? I don't want to take 10 pairs and make this calculation and people be like, well, what did you consider? So that's exactly what we're looking at. And the main thing, there's two main things that stand out to me about this right now, is that it crossed above 1, and that usually happens during a bull trend anyways. And then the second thing is, when was the last time that the 90-day moving average ratio was above 1 for altcoins? It was before October 9th. It was like October 6th or, it was October/September 2025. So it's been a very, very long time that we've been below 1. Even on the pop in mid-January that we got, this is mid-January pop, right? On this pop, we didn't even get above 1. So the fact that we broke to a new high here, back to levels that we haven't seen in 6 months? Yeah, 6-7 months or something like that. It's encouraging to see that. And I think for a little bit more context, you can look at another time where we were below 1 for a very long period of time, and then we climbed above it, and it was a good signal that, okay, the tide might be turning a little bit. We finally might have our opportunity to turn things around and get a bullish impulse out of the market, and that is in 2024 leading into the presidential election. So the initial breakdown happened like April 11th, 2024, and we broke all the way down to 0.82. And you can see from April 13th all the way until September, the 90-day moving average ratio for altcoins was underwater. It was sitting below 1. That means on average, altcoins were trading below their 90-day moving average, right? So we broke above 1 finally at the end of September. And this is the end of September for some context for Bitcoin. You're looking up here. And this is effectively the end of, crappy sideways price action. The price grinded a little bit, but it grinded up from here. It was pretty much, outside of like a little fake out to the downside, it was kind of up only from here for that one last impulse in the bull market. So the reason why I use this as another example basically is because there are instances where the market becomes sneaky bullish, and you need to pay attention to those signals and see if they're happening and add them as another context clue to put your own puzzle together to better understand where the market is standing at any given point in time. So this is one of those examples, though, that we broke above 1, new highs from the entire bear trend that we've had for 6+ months, right? So it's been underwater. We're finally above water again. And the last time that you got like something this textbook, you got it here on the bounce in April 2025 after Liberation Day, but it just wasn't quite the same because the market was like kind of dying. Like I said, we were in the middle of a bear market and nobody realized it yet. This fall period going into the U.S. presidential election in 2024 is a great example of, okay, altcoins have recovered. They're back above their 90-day moving averages. And even though the price is sideways, it's a good signal that there's been enough consolidation going on, that prices aren't just dying off anymore, that we are actually in some sort of constructive sideways range, right? You're not just endlessly bleeding out, because the reality is like when prices are ripping to the upside or bleeding to the downside, those are expansion moves, right? You want some sign that there's been consolidation going on. And the fact that you get just this consolidation in the 90-day moving average ratio around 1 and breaking above it just tells you like, okay, price has actually gone sideways for a healthy period of time, and we're kind of getting back into a territory where like prices on average are trading higher over the past 90 days than they've been. So yeah, this is encouraging to see. This is something to pay attention to moving forward, and maybe an early signal that, hey, maybe it's time to start getting a little bit more excited right now. So this next chart, this is net breadth. This calculates the percentage of altcoins that have broken to new 30-day highs minus the percentage of coins that have broken to new 30-day lows. And obviously positive values are indicative of a bull trend because more coins are ripping to the upside than moving to the downside, right? And this is zero. Keep in mind, like this area is zero. So we recently broke up to 26.13%, which indicates that there are more coins breaking out than breaking down, right? On initial glance, you think, oh, positive values. That's exciting. This is also like it's moved relatively far away from zero, and you're thinking, oh, like there's some wiggle room there. There's something going on. Maybe it's a breakout. And the reality is, yes, it could be a breakout. There's a lot of reasons to believe that there could be a breakout incoming very soon for crypto. However, I want to play devil's advocate always, right? You always want to make sure that you understand what is going on both sides of the figurative coin, right? The problem is that this entire area, right, this up below 30% and below basically for the past 9 months has basically been the rejection spot. Ever since August 2025, anything that's popped to this area or lower has just been turned around by bears. So we are kind of at that big point, that big line in the sand where you're like, okay, the bears need to make their stand here. This is it. This is where, if they want to keep pushing this thing lower and keep being bearish on Bitcoin and altcoins and everything, this is the time to shove things lower. This is pretty much it. So, that's pretty much what's going on here. Because, otherwise you can get a breakout and you get like these big moves to the upside. But that remains to be seen. This is probably max danger in terms of like, oh, if you're going to buy the top of a range, there's reasons to always get nervous about that. But what's funny about the internal Levalytics strategy is that a lot of the time we do end up buying the top of ranges after there's been a healthy amount of consolidation. On a lower time frame basis, I would consider it justified to take a stab here, given the way my strategy trades. For other people, just like I said, this metric just tells you everything. That gives me pause about that idea or, doing it more myself, right? Is the fact that this area net breadth has been shut down and sent back to the downside every single time it's approached it. So we are kind of reaching that final spot where the bears make their decision about what is the fate of the market, or if the bulls just decide we're back in town, baby. So let's see what happens. So this is a metric that I assume not a lot of you have seen. It's actually on the Dude Terminal website, and I call it the leverage liquidity cycle indicator. And what it really does is it calculates, is open interest growing at a rate that makes sense in comparison to the number of new perpetual swap pairs that are being added to Bybit. So this is all using Bybit. And if anybody ever asks me why I use Bybit open interest data and I don't use Binance much, it's because in the Binance API, I can only pull 30 days, the most recent 30 days of data. And unfortunately, I just don't have older entries saved into my database. So because Bybit actually provides all the historical data for all their trading pairs, it's just what I use as my gauge and my thermometer for what's going on in crypto perpetual swap markets in terms of open interest, because Binance also does provide funding rate data, and they provide all the historical funding rate data. I'm not really sure what the reasoning is on that. If somebody knows, feel free to drop it in the comments. But long story short, though, this metric tracks, like I said, if open interest is growing for altcoins at the rate that would make sense given the growth rate of new perpetual swap pairs being added to the exchange. So positive values indicate that there's a lot of leverage being destroyed in the system. So you can see right here, for example, right after this dump in middle of 2023, we were in a destructive period of open interest where it was just, and usually these destructive periods of open interest, what it really means is just we're in a bear trend. It means that like perp traders are kind of getting carried out and that there's not been a rebuilding of open interest over that time. But keep in mind, right after the Bitcoin ETFs got approved, we went into negative value range. And negative values are indicative of us being in a healthy liquidity regime where leverage is getting absorbed into the market, and the market is just getting more and more levered up. And, unfortunately for crypto, maybe this is the same thing for traditional markets. It's that usually when the market goes up, it usually means that there's a lot of leverage building in the system. And I think that's just a natural byproduct of the fact that people get excited, prices go up, and people feel like they can't, nothing can go wrong, and so they just keep adding more and more leverage. So that's what you're getting these continuous negative prints for. And then you start to get you can see prices going up, and then over time you start to get like this bearish divergence though, where you can see that maybe there's some decay in open interest coming out of the system as price is going up. And then eventually you end up getting these liquidation events that push the price price goes down. Let's say this is the end of April. Where's end of April here? End of April, and you get a big jump upwards, right? And a big jump upwards means that there was people liquidated on this event. So you just keep going, and throughout the entire year of 2024, right, as price went sideways and people got chopped to death, you start getting this decay of open interest going on in perpetual swaps markets. So this is something that I'm keeping track of here. And the reason, this is why I gave you this whole explanation, right, is that here we are still in a liquidity, a leverage destruction regime, right? We are getting, what's the current value? 1. Yeah, so you want to get back into negative value territory for us to be in a leverage buildup regime. We are currently in a leverage destruction regime. And, the leverage destruction regime began on October 10th, which makes sense, right? That was a gigantic, devastating liquidation event for crypto bulls, crypto purveyors, market participants, even people that were not involved in trading perpetual swaps. Prices just cascaded downwards very quickly. That's how you got those 30% candles within a couple hours on some altcoin pairs. And so ever since then, we have been in a liquidity/leverage destruction regime. And I think this is a chart to watch moving forward. If we get back into negative territory, that could mean we're in for what I would believe is a longer duration bull trend where, not that I would say it's safe to get long perpetual swaps, but I do think that there will be leverage built up in the system, and leverage only builds up in the system if people are able to get long. So that's something to keep in mind. And this is just something that, I think if we get a breakout to the upside and Bitcoin breaks above 75K and gets us back up to this mid 90s range even up here, this value might start flipping negative. And when you start getting this value flipping negative, it might mean, like I said, game on. And it might become a type run up where you could get maybe not quite Bitcoin ETF type run up, but it could be. You never really know. And I think the fact that this value is still so high up means that there's a lot of room to run if you want to push this down to the downside and build up a lot of leverage into the system. So I guess we'll see. Like I said, this probably requires a breakout to occur before this could actually happen. Okay, this is an extra chart that I actually did not provide in the newsletter, but this calculates the average open interest per perpetual swap pair divided by the BTC USDT perpetual swap pair, and we have very low value for this right now, which signals that altcoin open interest is very low relative to Bitcoin open interest. So this doesn't happen very often, and it usually happens during liquidation type events. You see there's a liquidation event here where you get a green dot, low value. October 10th, liquidation event, low value. Another liquidation event following the next rug on the way down to what could potentially be the bear market bottom, which occurred on January 29th, 2026, where this rip downwards here. So we have another one of these prints. So I guess we'll see what happens here, because usually you get the red dots and the large prints when we're reaching probably like a euphoric tipping point. We got this after the presidential election, and we got this during the BTC ETFs run up. So the only other time that I really see where it's not really liquidation event related, where you get this really low value print, is we got it right before the Bitcoin ETF run up. So that's something I keep in the back of my mind. Like I said, the sample size isn't gigantic for this metric, but it is something to watch and pay attention to. And just note that just keep in the back of your mind, on average, altcoins have pretty low levels of betting, levered betting going on versus what's been going on in the Bitcoin realm. So yeah, I guess we'll see. This creates potential for, people to make up that difference between BTC BTC perps and altcoin perps to just start jamming altcoin perps and send this metric back to the upside. And keep in mind, this is a 90-day Z-score, so this is not a very low time frame. So it takes like a little bit of extra juice to actually like get this thing up or downwards. So this is like a longer duration type metric that gives you an idea of like, the rolling quarterly flows basically are towards betting on Bitcoin with leverage versus altcoins with leverage, which makes a lot of sense when you think about the market context where altcoins have just been completely obliterated. And probably a lot of people left the casino. So yeah, we'll see what comes of this. Okay, so I closed out with this chart. The blue line shows the percentage of pairs on Coinbase that are down more than 90% since they were added to the exchange. And this red line shows the percentage of pairs that are in profit since they got added to Coinbase. So the blue line, like I said, down more than 90%. The value for this right now is currently 41%, something around 40% basically. And then the percentage of pairs that actually just have positive returns, anything above zero, is around 10%. So 90% of pairs have negative returns on Coinbase, and of that 90%, there's a 40% cohort that is down more than 90%. So basically, all the assets on Coinbase are clobbered. This means everything in crypto is clobbered, right? Like Coinbase is considered one of the top curators for offering digital asset exchange in crypto, at least in the United States. There aren't that many other American venues where you can go get this done. You can do Robinhood, you can do Kraken, Gemini, but that's about it. So the fact that Coinbase is considered like the go-to crypto exchange in the United States and the returns are this heinous tells you everything you need to know. And the reason why I shared this chart at the end of the article was to kind of just give people a reason to think and really think deeply about the fact that, hey, things are down extremely bad. I think that's something to keep in mind. And the reason why I want people to keep that in mind is that you don't want to be too fearful to the point where you don't take action when things are really cheap. And I think it is very clear that crypto is trading at a heavy historical discount right now. And not that this means that every asset under the sun is going to have its heyday, go back to new all-time highs and all that. But if you are actually show some restraint and you buy the good assets and which stuff will actually pump, which I don't even think is that difficult to figure out anymore because it's basically mind share. If people are not talking about it, the odds of it actually outperforming the market in a good risk-adjusted way is not likely. So yeah, this is the main reason I added this chart. You need to keep this in the back of your head that crypto is trading at a heavy discount. Everything is down extremely bad. Nobody's in profit. No coins that have been added to even Coinbase are in profit. There's a decent chance that if you know anybody involved in crypto and they didn't move to 100% cash starting in fall 2025, they've lost a heavy chunk of their net worth. And especially if they're sitting in altcoins, they possibly lost basically everything. And to the extent where the damage is borderline irreparable with some of these pairs if you're holding the wrong stuff. So yeah, there's a lot of fear, but do not be too fearful because things are extremely cheap right now. So yeah, that was like the kind of like positive note I wanted to leave people with is that things are cheap. It's okay. Everything's in the past at this point, so you might as well just make the best decisions for yourself moving forward. It's like the whole sunk cost fallacy, right? It's already in the past, so just make the best decisions for what makes sense moving forward. And the reality is that everything's really cheap, so that's a good thing. And if you're just focusing on the future. Okay, so this is the portfolio allocation for Levellytics right now, and as you can see, BTC and ETH have kind of moved back to the top of the portfolio. I think it is just really easy to hold them right now. Like I said, everything I've talked about today, everything that's been talked about in the past few weeks, things are just really cheap. Stocks bounced. The whole space has been wiped of leverage. There's a lot of signs of apathy that have kicked in on a volume front. And, there's signs of altcoins even breaking out right now. That's some of the stuff that we talked about today. So there's a lot of reasons to potentially get excited. And there's no way I was just going to allow the Levelitics book to be just, we're relatively underexposed anyways, right? We're only 33% long. So it's just, you got to make sure you got something on right now. If you're just trading, not that that's financial advice. I always want to make sure I say that because, I'm not here to take the fall or anyone to give me shit for being wrong. I'm just giving my opinion based on the data that I have at hand. But there are a lot of reasons to believe that BTC and ETH are going to perform well. And to keep in mind, BTC and ETH have equal allocations right now, but there will be a point in time where I possibly sell one for the other. I still have faith that here's the ETH BTC chart that I want to show you guys. Buy blue, sell red. Remember, it's still red, but I still have this bullish bias that I believe it's going to make a big move in the next 2 to 6 weeks, and it's going to start outperforming Bitcoin. And when that happens, I'm probably going to shift that BTC allocation into ETH, and that's a good opportunity if that happens to outperform BTC. And like I said, if that starts to happen, I still think altcoins will perform extremely well as well. And that's another opportunity to outperform Bitcoin. And as you can see in the Levelitics, hold on, this is not it. Here, this is simple. This is just showing which assets we added to. We added to Zcash, Hype, BTC, and ETH. Zcash is the most volatile. I've already given the bull case on that, and I think that it will continue to outperform, even though it'll be a very rocky road along the way. Hype is just like a workhorse. It just trades like a large cap. It's not like, it's lower risk, lower beta. So you can add it without being too nervous about the impact to your portfolio to the downside. And then BTC and ETH. So these are the things that we've added over the past 10 days. But what I wanted to show you as well is we're in Dude Terminal right now. Let's go to Asset Management, Levelitics Portfolio. This is not it. Oh, no, this is messed up. I ran the wrong code. It doesn't matter. But long story short, I can use this actually. Okay. Oh, never mind. This is not the right chart. But long story short, though, we at Levelitics, I think we're down like 29%, if I'm not mistaken, versus BTC, which is down 36%. And BTC started to creep up on us a little bit. Altcoins are still down like 59%. So I've been talking about this for weeks now, maybe even months, that because of the way our strategy runs, there's a decent chance that Bitcoin will bottom. And the returns since we launched Levelitics will catch up to the returns of our book. And we are expecting that because we're a momentum only strategy. So the odds of us actually catching the Pico bottom on anything are pretty close to zero. And that's completely fine because all we care about is catching the meat of the move in each direction, just sticking to the playbook. And that's exactly what we're doing. And we're expecting that when the time comes, we'll have our opportunity to outperform and then move back into BTC or cash. Like I've been saying too, and been beating this drum for a little bit, I think if we do get a breakout in the next 2 to 6 weeks, I think it could be one of those violent moves that are actually really exciting for crypto. They don't come around that often. It feels like, the bear trends last eternities, whereas the bull trends just putter out. You don't really get much of them. They last like 2 to 6 months and that's about it. So, that's something to keep in mind. And, we always make sure that we're honest with our readers and viewers about the whole Levelitics book versus BTC and alts and stuff like that. So that's just where things stand. We're pretty excited about the future. And yeah, I think that's about it for today, though. If you guys have any comments or questions, to shoot them to me on Twitter at PermabullNino or at the Levelitics account on Twitter, which is just Levelitics. You can also respond to this video. You can also add comments to the Substack newsletter publication. And yeah, that's about it. We're going to close out for the day, and I hope you guys have a great weekend. Thank you for watching.